All right, if you're gearing up for the NMLS exam, you know the loan estimate and the closing disclosure are going to be on there. And let's be honest, they're packed with these tricky timing rules and tiny differences that are almost designed to trip you up. So that's what we're going to do today. Think of this as a super focused cram session. We're going to break down exactly what you need to know to just nail these questions. Ready? Let's get into it.
So let's kick things off with a question that, I'm telling you, trips up so many people on the actual exam. What are the 3, and only 3, critical changes that can actually delay a mortgage closing? Got any ideas? Well, stick around, because by the time we're done here, you're going to have that answer down cold. Okay, so this whole thing, it really boils down to 2 key documents, 2 main characters in our story, if you will. You've got the loan estimate, which we'll call the LE, and the closing disclosure, or the CD. Seriously, just getting what each one does, that's half the battle right there. Here's the easiest way to think about it. The loan estimate, that's kind of like the first guess. It's the projected score at the start of the game. But the closing disclosure, oh, that's the final score. It's what's official when the whistle blows. One's the guess, the other's the reality. Simple as that.
Okay, so let's get into the official definition here. The loan estimate, the LE, is the document that gives the borrower an estimate, and that's the key word, of their loan terms and all the closing costs. Now, if you've been around for a minute, you'll remember this is what replaced the old good faith estimate, the GFE, and that initial TIL disclosure.
And then you've got its partner, the closing disclosure, the CD. This one gives the borrower the final numbers. No more estimates. This is the real deal. And yeah, this is the form that took the place of the old HUD-1 settlement statement and the final TIL. All right, let's zoom in on that first document the borrower gets, the loan estimate. You got to pay close attention here, because the rules around this thing are basically a gold mine for exam questions.
So what actually starts the clock on this whole thing? It's a completed application. And you have got to remember this mnemonic, because the exam loves it. Aliens. As soon as a lender has these 6 pieces of info, that's address, loan amount, income, estimated property value, name, and social security number, bam, the clock officially starts ticking.
And this right here is the first major timing rule you just have to know, period. The loan estimate has to be given to the borrower, or at least put in the mail, within 3 business days of getting that application. Say it with me. 3 business days. You got to burn that number into your brain. Okay, now this is a huge exam trick. Seriously, listen up. If you're taking the test and you see a question with the phrase within 3 business days of application, your brain should just scream loan estimate. It is one of the biggest, clearest giveaways they can put on that test. It's a freebie if you know it.
Okay, so we've got the estimate down. Let's shift gears and talk about the final word. The document that says, here are the actual binding costs. We're talking, of course, about the closing disclosure.
Now, here comes that second critical timing rule. The closing disclosure has to be received by the borrower at least 3 business days before consummation, which is really just the official term for closing. And did you catch that? It's a huge difference. The LE rule is about when it's sent. The CD rule is all about when it's received. That's a classic exam trap right there. And you guessed it, just like the LE, there's a crystal clear exam tip for this one too. If a question talks about the borrower receiving something 3 business days before closing, the answer is always the closing disclosure. That's the whole point of the question. They're testing you to see if you know the difference between those 2 3-day rules. Okay, but wait, what even is a business day for this CD waiting period? This is one of those sneaky little details the exam just loves. It's not Monday to Friday. For this specific rule, it's every calendar day except Sundays and federal holidays. So you heard that right, Saturday counts. Don't let that one catch you out.
All right, now we're getting to the main event, the absolute heart of the matter. This is the rule that causes the most headaches, the most confusion, and yeah, it's what actually delays closings in the real world. We're talking about the 3-day reset for the CRD.
So let's circle back to that question I asked you at the very beginning. The borrower has their CD, that 3-day waiting period is ticking away. What could happen that would just blow the whole thing up and force that clock to start all over again, delaying the closing?
The magic number here is 3. That's it. There are only 3 reasons. Not 4, not a dozen, just 3. And this is so important. If something changes that is not on this short list, it does not trigger a new waiting period. It does not delay the closing. And here they are, the big 3. Number 1, the APR, the annual percentage rate, goes up by more than the tolerance, which is usually 1/8%. Number 2, the loan product changes. Like you were getting a fixed rate and now it's an ARM. That's a big deal. And number 3, a prepayment penalty gets added to the loan out of nowhere. That's the list. APR, product, prepayment penalty. That's it. You know these 3, you've got this.
Okay, so let's put these two documents head to head. Putting them side by side is really the best way to lock these differences into your brain before the exam.
Here's another one of those things that are just easy points on the exam. Record keeping. How long does the lender have to keep these docs? For the loan estimate, it's 3 years. But for the closing disclosure, it's 5 years. So just remember, LE is 3, CD is 5. Simple as that.
Okay, this slide right here, this is your ultimate cheat sheet. Seriously, screenshot this. It puts everything we've talked about side by side. Look at the LE column. It's an estimate, it's tied to the application, remember aliens, and it's kept for 3 years. Now look at the CD column. It's final, it's tied to the closing, and it's kept for 5 years. This table tells the whole story. It's perfect for a final review.
All right, you ready for a quick lightning round? Let's rapid fire a couple more exam nuggets you absolutely need to know. These pop up all the time. First up, tolerance. This is a huge concept. It's basically asking how much can a fee change from what was on the LE to what's on the final CD. And for some specific fees, the answer is not at all. The tolerance is 0.
So which fees have 0 tolerance? The big ones you got to remember are fees paid to the lender or anyone they're affiliated with, and transfer taxes. Whatever number they put on the loan estimate for these, that has to be the exact number on the closing disclosure. It can't change, not by one single penny.
So, when you boil it all down, what's the NMLS exam really testing you on here? It's your ability to tell the difference between the promise and the final reality, between the start of the journey and the finish line. After going through all this, you've got the timing rules, you know the triggers, you understand the reset conditions, you are so ready for these questions. So, can you spot the difference between an estimate and a final disclosure? Yeah, I'm pretty sure you can.